What's going on, guys? Today we are going to be talking about Palantir Technologies. And specifically, I want to take a look at what has caused Palantir to fall by over 13% in just the last 5 trading days. We will discuss some individual investors' thought process that could be causing the stock to fall, as well as some issues with recent contracts that Palantir has signed, Cathie Wood and her continued buying of Palantir stock, and finally, Palantir's EPS expectations for next year, as these results could have a big effect on Palantir's stock price. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, subscribe. There are 2 main things that I think individual investors could be doing right now that's driving the stock price down. And the first thing we could see individual investors doing right now is locking in gains. We saw September of 2022 all the way through April of 2023, the stock trade basically sideways in a range of around $6 all the way up to $8. And a lot of investors took that time period to build out positions. And what that means is if they spent that whole time building out positions, about half of their position was built out over a year ago. And oftentimes individual investors will wait at least a year to sell out of a position because they can now claim long-term capital gains taxes. And long-term capital gains is taxed significantly lower than short-term capital gains. For 2023, if you make between $44,626 and $492,300, you would only be taxed at a rate of 15%. And short-term capital gains are actually taxed at the same rate as your W-2 job. And what we can see for 2023, that if you are a single filer and you make between $44,000 and $95,000, you are taxed at a 22% tax rate. And that tax rate goes all the way up to 35% before you would jump to the 20% range for long-term capital gains. So we could be seeing people lock in gains, but the other option would be people locking in losses, especially as we head into tax season. So you may be looking at Palantir's stock chart and wondering who is actually down on their positions, because if you bought over the last couple of years, you are up right now. However, what we can see from the market is if you go back to 2021, there were a few dips here that were bought up very heavily after. And each time the stock dipped, it hit around $20, which is very similar to what we just saw. The stock went up to $20 and even pushed past it. And oftentimes investors, especially individual investors, will try and hold on to a position and tell themselves, if the stock ever gets back to my cost basis, I will sell out. And that could be exactly what we're seeing. We could see a lot of investors that bought in 2021, they might have even averaged down into 2022. They could be selling out as they start to reach back to their cost basis. And that's not to say the stock isn't without issue. We've seen a lot of analysts talking about some of the Army contracts that Palantir has been signing and wondering if they're as good as they look on the surface. And one of the things investors are paying attention to is an Army contract that is set to expire here in the next few weeks. It was originally signed 4 years ago for $458 million. However, investors are looking at this contract and expecting Palantir to sign a lot lower amount than this $458 million. And the rumor currently is that that deal may change to a 2-year deal for $116 million. And another concern, not only with this contract, but with a few other contracts that Palantir has recently signed, has to do with the sharing of those deals with other vendors. Oftentimes, you'll see these very large numbers like $458 million, and it will have Palantir's name in the headline. However, when you read into the contract, you'll find that a lot of that revenue is actually shared across many different vendors. Personally, I'm not too worried about it because I think Palantir getting their name out with a lot of these Army contracts is going to be great, and that's going to be a stable source of revenue. But what I really want to see out of Palantir is I want to see them growing their commercial revenue, because that is where they are going to see the most benefit for their top and bottom line numbers. And I believe Cathie Wood sees that as well, as over this past week, as the stock has continued to fall, she actually added 1.5 million shares of Palantir. And with these purchases, ARK now owns 7.7 million shares of Palantir. However, one important note to keep in mind is that it's still only 1.61% of the fund. And part of Cathie Wood's thesis around Palantir could be around their EPS expectations over the next couple of years. We can see that analysts right now are expecting Palantir to generate around 25 cents of positive EPS for the current year. However, they are only expecting that number to grow to 29 cents in 2024. Because these numbers are so small, this is still 16% growth year over year from 2023 to 2024. However, in my opinion, opinion, I think this could still be a low growth rate, especially when we look at estimates around revenue. Analysts are expecting revenue to grow to $2.66 billion in 2024, up 19.8% year over year. And the reason revenue is so important for Palantir is because of the business model that they are in. They are in a software as a service business. And what that ends up meaning is that they don't have to increase their costs significantly to continue generating new software because they are selling very similar packages to all of their customers. And we've discussed this previously with companies like Hertz. If Hertz gets their software and they start implementing it, now any other car company that is utilizing very similar data to Hertz, they can implement the same type of AI technology to capture data and output it for those other customers with very low additional costs. So ultimately, scale for a company like Palantir is going to be very important for profitability. Personally, I'm not scared off at all by Palantir's recent dip. I think a lot of this, in my opinion, has to do with investors selling out. Again, these price levels that we're seeing are very similar to what we saw in 2021, and I think a lot of investors that have been sitting on the stock really didn't want to buy in more, and they really didn't want to sell out at a loss. So now that they've gotten back to around break even, they feel comfortable selling out, taking some tax loss harvesting, and then also investors that were buying last year are probably now taking some profits in the company. And that's just my opinion. I think those are the biggest factors that are really playing into Palantir dipping over the last week. So as always, guys, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.